certainly we'll be trying to cover as much as possible. But in case anybody has got any specific query.
How many know GIFT City?
See, we know, but how there's an X one only can do it, right? To GIFT City, but what about Y when you want to do it and how to get things done?
I don't think so. That a lot of people don't know about the GIFT City. If you can start with the basics, with how it works and like how a person can invest.
So how I was planning is we'll start with what is GIFT City, what are advantages and disadvantages, and then we'll we are just waiting for the mic.
Okay. Better we come little ahead.
What teachers do in India that people are always fearful of sitting in the front.
Not like that.
I've always been a backer.
First, never time to come.
Yeah, I think by the time mics arrive, people can come in the front. So I was planning to we'll first go through GIFT City and we'll see what all options are available through GIFT City. There is some complications when it comes to whether you are a resident or a non-resident. So we'll discuss that also. And obviously we'll be able to Q&A on the audience. Is my voice audible now to everybody? Great. So, hello everybody, I am Ankit. I am founder CEO of Wealthy Nivesh. We are a wealth boutique firm. We started some 3 years back. Previous to that, I was regional head with the wealth team of HDFC Bank. I have with me my partner Aditya over here. So I look after the business side and Aditya looks after the product and research side. So brainy work Aditya and talkative work Ankit. So I was saying there is a clear-cut segregation that when it comes to anything which involves talking, then I take care of it, and when it comes to brainy stuff, then Aditya is the one who does the heavy lifting. We identify ourselves as a boutique firm which believes in numbers only, and that's the reason whatever we suggest to you or recommend to you are based by some proprietary algos that we developed over years. So I'd like to introduce Vaibhav over here. Vaibhav is head of product strategy and international business for Mirae mutual funds. I'll start with an appreciation for Vaibhav. So in our annual investor summit that we did in the year of 24, because Vaibhav's confirmation came last, so he was the last to address the audience, and you can understand how difficult that job is. But Vaibhav ensured that there was huge audience participation. So all kudos to his stage skills. One good thing that I like about Vaibhav is his ability to articulate things in a very simple manner and his ability to engage audience as well. So welcome Vaibhav, thanks for coming. So as we just discussed, let's start with understanding what is GIFT City in a very basic form.
Yeah, thanks Ankit, and great to be at this place, very nice, vibrant place to be here. So let me cover a little bit about GIFT City, and maybe let me start with a story that maybe a couple of years back I had heard a lot about GIFT City, and I said let me try and actually see what is GIFT City. So I took a flight from Bombay, went to Ahmedabad, didn't even tell my sales team that I'm coming there, and took a cab, went there, and after 15 minutes saw a huge hoarding, welcome to GIFT City. And I really thought that there will be a city which will come. So there was only green pastures. 5 minutes I went through again, ahead, and I thought finally some city should come, and I could only see green pastures. I had decided to spend the full day, so I said let me spend the full day and then make a decision we should do. Then lunchtime had come, so you usually get the essence of a place in lunchtime. Usually someone goes for smoke, talks to their spouse, goes for a walk. I thought these three habits Indians have, one out of these three. And I could say hardly 20-30 people in the entire space, or hardly 10 cars in the period from a couple of hours. I was really thinking, is this what the government is planning to make GIFT City as a solution which can answer Dubai, Singapore, London, Luxembourg, etc. And I had an evening meeting with the regulator IFSC, and I had a long meeting with them for about a couple of hours. And after that meeting, actually my vision and thought changed, and I decided that we need to set up an office in GIFT City. So 2 years back, when no mutual fund was sort of ready to enter into that space, our organization started an office in the GIFT City. And I can say it's been a very exciting journey for us. So the story I wanted to say is, when I started, GIFT City was nothing. As we go now, there are thousands of cars in the GIFT City. In fact, some of the places you have to wait for an elevator to come, and you have to wait 5 minutes to get your turn to catch. And companies like Bank of America has set up about 2,500 people within that same one building in that campus. So a lot of things have changed in GIFT City. The idea of GIFT City, which I think so should attract all Mumbai guys, is that you work here and your house is here. So Ankit was saying, we were discussing just back that which clubs we are member of. So and he was saying this is a good club. I said I live in Juhu. My radius is not more than 3 kilometers. I don't have the bandwidth. So he lives, I think, in Kandivali. I don't know how he can come. But idea of GIFT City was you work here and you stay here. And it was India's answer to Dubai, Singapore, etc. To make this dream a reality, what the government has done. In India, there are 4 regulators. Maybe let's have some question and answer questions from me. There are 4 regulators in India. Can we name them? SEBI, RBI, IRDA, one more? No, MFI is not one. But so, SEBI looks at capital markets, RBI, banks and MDFC, IRDA, insurance, and you have PFRDA looking at pension. But, yeah, PFRDA for pension. But in GIFT City, there is one regulator called as IFSC, and it has powers equal to RBI plus SEBI plus IRDA plus PFRDA. So it's a super regulator. Beauty of India is bank KYC doesn't work in mutual fund KYC doesn't work in insurance doesn't work in pension, because all regulators think differently. Take it as a joke. Don't quote me in front of regulators, but in GIFT City, because there is one regulator, there is an ease of doing business. Second is, though GIFT is located between Ahmedabad and Gandhinagar, it is actually considered a jurisdiction not in India, as per FEMA. So when you deal in GIFT City, the mode of transaction is not Indian rupee, it's foreign currency. Right, and 15 currencies are allowed in the GIFT City, including US dollar, Aussie dollar, Canadian dollar, euro, pound, sterling, dirham, etc. Name me a couple of currencies not allowed in the GIFT City.
Pakistani rupee.
Every place I hear Pakistani rupee and Chinese currency, which I understand. That of course is right, but the answer is Indian rupee.
Indian rupee is not.
So Indian rupee is not allowed to trade in the GIFT City. And I can tell you again, when we were setting up our branch, we were trying to send laptops to our branch. So we had to fill between us and our branch import and export requisition forms. Right? So it's considered as an export of service. So when you invest as an investor in GIFT City, GST is not applicable. Because 18% of your income becomes, or your expense becomes lower. So it's a jurisdiction in India, but technically not a jurisdiction in India. And the idea of the jurisdiction is simple. India gets foreign money from Singapore, Dubai, Cayman Island, Mauritius, etc. effectively, if you look at it, Mauritius is just an island, or Singapore is just an island, and they've become huge sort of jurisdiction. They've become so large because India has let them become large. If we could attract the money directly into India, then maybe Mauritius or Singapore would have remained only islands. So the government's plan is to get all financial capital directly to GIFT City instead of using Dubai, Singapore and other routes to invest into India. And you have a very friendly regulator to make that large. And to make GIFT City large, again one more story, I'm used to telling stories. So, all of you must be knowing Gujarat is a dry state. And in 2024, during Vibrant Gujarat, this is the feedback that some of us had given, that if you want to make GIFT City big, you need to have a social life. In a dry state, GIFT City is the only part to have alcohol allowed. And after that being allowed, all the partners of ours wants to come to GIFT City very regularly. And I keep telling them that I have a very small brand, nothing to come and do. I can see some already with a glass to celebrate that. But that's how MFDs feel that they need to come and see our location. And hence, a lot of marriages Gujaratis are happening in GIFT City. In fact, India is bidding for Olympics 2036 and Formula 1. If India can get the bid of both, they are planning to set up everything in the GIFT City. Long story short, Ankit, idea is to just tell GIFT City is an evolving jurisdiction. Idea is to attract foreign capital into India and make it very easy, whether it is resident Indians to invest globally or global investors stroke NRIs to invest into India easily. It's an early stage of investment, an early jurisdiction, but I think so in maybe 5 or 10 years, it has the ability to become very, very large and create a very large ecosystem, at least for the fund management industry. And now all businesses, right from IT to airport leasing to ship leasing to banking to treasury and all, are also being set up in the GIFT City. And to incentivize that, there is a 10-year tax holiday. So an income that you earn through GIFT City has a 10-year tax holiday. In India, only farmers are exempt from tax. This is maybe the only second place where you are exempt from tax. So eventually it will become sort of quite large.
So what I understood, the government is saying when already people are transferring money from India to Singapore and Dubai, and when money is coming to India via Dubai, Mauritius, etc., why don't we have a setup in India itself?
Okay.
To make it more amicable to global money transfer, movability of money, dollars, etc., and also to ensure, as you and to incentivize it, they are making it tax-free, etc. Correct?
Correct.
So, second question. So we understood what is GIFT City. It's a sort of financial island within India, within mainland. From what I understand, there are different categories of investors. One is resident Indians and the other is non-residents. And from non-resident, it includes both NRIs and non-Indians as well. So if you can, take us through what kind of investment avenues they have and what kinds of restrictions they have.
Thanks, Ankit. So, the idea of GIFT City was to make it easy for NRIs and foreign nationals to invest into India. So if you're a foreign national and you want to invest into India, it is absolutely impossible to do it. First, you have to take a PAN card. Then you have to do income tax filing in India. You have to file advance tax in India. You have to do reporting of transactions every day on the exchange. You have to have a custodian. Which right-minded foreign national will go through all this pain to invest into India? He will rather buy shares or Vanguard ETF and just buy India and not do all this. So the idea of GIFT City was to make it so easy that even a foreign national can invest into India without documentation and complete ease. And the same challenges NRIs had in India. So So NRIs are effectively non-resident Indians, but the way we ask them for proofs and documents, sometimes NRIs feel that they are not required Indians. Right? So you distrust what quality of money they bring into India. So you say to them, you have to give a PAN card, you have to do Aadhaar PAN card linking. Why will an NRI do a PAN card Aadhaar linking? Why will a young NRI ever take a PAN card in India? How will he get an OTP on a foreign number? Then you also expect him to do income tax filing in India. TDS is deducted to them. Then we tell them you can only invest in INR. See, any NRI who is living outside India for maybe 10 years or 20 years, 90% of his income is dollars. And you tell them that no, you give me money in INR, but you can't take that money back also. So people might love you, but not so much. And I think those were the challenges. So what GIFT City did, it made life easy for NRIs and foreign nationals to invest into India. First, PAN card is not required to invest in GIFT City. Of course, then Aadhaar card will not be required. It's a very easy documentation, like one passport you can give and you can start investing into India. Second is, no tax filing is required when you invest in the GIFT City funds. And in some of the funds that we've created, where the underlying is a fund of funds with underlying as mutual funds, there is no tax liability as well. So zero tax liability, zero tax filing, no TDS. Just come the day you want and go back the day you want without paying tax. Third, money can come from any foreign bank. Bank of America, Bank of Singapore, Abu Dhabi Commercial Bank, HSBC, Deutsche Bank, whatever bank you want, and can go back to that same bank without questions being asked. And fourth, you can invest in foreign currency and can take back the money again in foreign currency. So these advantages have made it very possible for NRIs and foreign nationals to invest into India through the GIFT City route. Second is, all of us, I'm assuming most of us are resident Indians. We want to invest globally, but there are no ways to invest globally. There are hardly any ways to invest globally. India is less than 5% of the world's market cap. What does that mean? 95% of the opportunities are not present in India. So if you want to tap a theme very early, there is no way you can invest other than wanting to invest globally. And as a resident Indian, we cannot. GIFT City is given that flexibility that resident Indians can also invest in global funds using the LRS route as well. So I believe GIFT City is actually a gift for NRIs and a gift for resident Indians, because it makes their life of investing very easy, and they can give you a lot of options in which you can invest.
So I'll add on to what Vaibhav just said. So in GIFT City there are two fund of fund where the underlying will be mutual fund in India. This I am seeing inbound funds in India. And second is where underlying will be direct stocks or equities. Now, because in India mutual funds are pass-through structure, so there is no taxation at mutual fund level. And because in GIFT City there is no taxation, so again this is not for Indians, I am seeing from the outside. So for NRIs it becomes practically tax-free to invest into India, which otherwise is not available, correct? Now,
one thing to Ankit. All of us are resident Indians. We pay 12.5% and 20% tax when we invest in mutual funds. If you have a relative there, if they invest through the GIFT City route, they can invest without paying any tax. It's a Gujarati way of finding out a way not to pay tax. You can't do it through a friend, but of course through a relative. So I'm saying it's very easy for any NRI to invest without
many times it can be other way around also. You can do it through a friend but not through a relative.
But your capital will not increase, right? If you are transferring the funds to your relative,
you are right, but वो देखो यार, इंडिया में हम सब जुगाड़ू है, तो जुगाड़ू टेक्निक्स में आपको अभी नहीं बता सकता.
They will get taxed in their country of residence. It's not tax free.
No, so I'll tell you advantage, and you brought a good point. India is not so powerful yet that it can say that everything can be tax free, not only in my country, in your country. So, tax incident might arise in their country. However, entire Middle East, Southeast Asia, and most part of Europe, lot parts of Europe, don't have a concept called as capital gains tax. And hence, there is no tax liability in their home country as well. So it's completely exempt not only in India, but in their countries. So it's a very easy way to invest in many parts of the world.
Great. And so I understand that residents can invest into those funds only which invest outside India, and non-resident Indians and global citizens, they can invest in any fund from there.
The question is it funds or direct equity both?
See, you can do direct equity as well. So we have in the GIFT City exchanges as well. So NSE, BSE both are there. NSE also lets you buy fractional units of stocks as well, and they do custody of that. But see, the experience is for a guy sitting in India to know whether to buy Nvidia or to buy which stock and when to sell is a quite difficult choice. Rather than individually buying stocks, easy to go to the fund route to invest, but you can do individual stocks as well. There is no restriction. There are many platforms which also give you access of investing outside India through the LRS route by directly buying stocks and ETFs. But then the decision making has to be done by the individual. And research will tell you 80-90% of the people who do direct don't make enough money. Actually, they don't calculate their XIRR returns. Otherwise, they would have come to know that they would tend to underperform the index.
And also, so from what we have seen from our study, so this category of fund is a bit mature now in given, but that transaction platform category, it's yet to get proper inflection point. So there are some players who are there, but they are not very active and very user friendly.
And the cost is also very high. So custody, broking, other currency conversion, all those costs are quite high.
So probably for that thing, as on today, it will be better to move your money to Dubai or other places where there are much more mature platforms, as being doing it through GIFT City.
There was a question I had. What's the difference between investing via the LRS route, Dubai versus GIFT City? Why would I do GIFT City versus the Dubai route? Singapore, I understand the paperwork is very hard to get to, but Dubai is not that hard.
See, two things. Even if you want to invest through Dubai or Singapore or any other place, even through GIFT City, when you transfer your money outside India, you have to do it under a scheme called as LRS, which is liberalized remittance scheme. It allows you to transfer per individual $250,000 per financial year, and you can use it to buy real estate. You can do it for investments, to travel or family maintenance, education or healthcare needs, etc. Everything is covered. Now, Singapore and Dubai have a lot of investment options, so you can pick from your fund either in Singapore or Dubai as well. Again, plethora of funds, thousands of funds. How do you choose the right one? When do you know to move out from that fund? It's sort of very difficult. Through a fund route, what you can do when you buy a GIFT City fund, like I tell you what we've done. We have created a global fund in such a manner that we've got underlying 4 funds. Funds feeding into semiconductor, artificial intelligence, blockchain, disruptive materials, US and China as the underlying countries and themes to invest in. Now, when should I go overweight on China? And when should I go underweight on China? When should I buy artificial intelligence or when should I buy semiconductor? It's not a very easy call for everyone to take. So someone who has the skill, knowledge can do it. Otherwise, you can leave it to a fund house to do the decision making for you. The cost structure doesn't increase drastically. So even if you buy a fund from your DIFC fund, you're not going to save too much compared to what you invest through GIFT City route. But you can get a professional manager here to service you, or a relationship manager, or a wealth outfit to service you here rather than someone outside India, which is difficult to sort of monitor and sort of manage as well.
So I'll add on one point to that as well. So when you invest through Gift City as compared to say Dubai or Singapore, one very big comfort is that you have got Indian jurisdiction. So if there is some dispute in your investment, you have to go to Dubai and you have to fight cases over there. If it's in Gift City, then you can fight over here. That is one thing. So, and I'll just add more perspective to what Vaibhav said. So how things are happening in Gift City right now, looking from Mumbai. I'm telling you this thing from Mumbai perspective. So there is a fund manager, Mirae mutual fund, which has got 2 lakh crore worth of assets in Indian mutual funds only. So they have a stake in the game. Then you have one advisor, which can be Wealthy Nivesh or anybody else, who will bring that product to you. So he will tell you you should buy this product. So you have got 2 stakeholders on the ground in Mumbai itself. Then Mirae will manage that money based in Gift City. So they will take the call whether, as you rightly said, where you should go long and where you should go short. As compared to if you do in Dubai, so either you need to have somebody in Dubai whom you can trust blindly, whom you can get hold of. And somebody, and on cost part also, so I worked in Dubai for 2 years as a wealth manager. Typically speaking, for buying mutual funds over there, you have to pay a fee of 1 to 2%. Over here, these people have got a provision, they can charge you up to 5% as entry fee that we get paid, typically talking to them. So cost wise also it becomes better for you. So these are 2 benefits which I believe are much better than investing through Dubai or Singapore.
So is there entry in Gift City?
So regulator has given an option to the provider, they can have that as part of their fee structure. But as I said, that can be waived.
See, most managers don't charge it. In India, we are very cost conscious, so no one pays. Right? Even if you go to a restaurant, you say, यार service charge हटा दे. हम थोड़ा ज़्यादा conscious होते हैं, तो most things we would never be ready to pay. And that's not a practice in India, but globally people do pay. So globally that option is there. In India, people are very cost sensitive, and that's why most funds don't charge such costs.
Sorry, one more question.
Yes,
What
please.
would be the value of funds today parked in Gift City by the LRS route or by Indians and similarly by NRIs to invest in India?
So that data is not available of how much is the investments done by NRIs or resident Indians. I can only say that about 200 funds have been launched in the Gift City so far. And capital commitments is what the term they use, which is a commitment of how much capital you will pay for investing in this would be in excess of, I would say, about $4 or $5 billion that would have come to the Gift City route so far.
But I think this is a very basic question. If there is a, like SEBI, you have a regulator, they should release the data that how much funds they are getting if they are setting up an infrastructure in Gift City.
No, there is a website of IFSCA and it discloses all sort of funds. But see what happens because international funds are there, it's not plain vanilla funds. You've got private equity funds, you've got real estate funds, you've got funds investing in funds, you have funds investing globally. So there is no one data point that you can pick and say exactly this is the number of how much money is there invested to Gift City. Maybe you can check with the officials of IFSCA, they will have a better idea on how much that number is. But you can go on the website of Gift City, like you said, SEBI. Similarly, IFSCA is a regulator and you will be able to see everything there.
How is Mirae's performance in Gift City?
So Mirae has been in India for now about 17 years. We manage about 2 lakh crore of AUM. We are among the top 10 AMCs in India. One of the largest foreign AMCs in India, growing completely organic, so there is no acquisition that we've done. Among the top 10 AMCs in India, most of the large names, have a bank to support. HDFC, Axis, Kotak, ICICI, SBI, etc. So we are one of the only guys without a bank support to be completely driven by investors and partners. So the AMC has been doing very well in India. In Gift City, managing 3 funds. One is the India Mid Cap Fund, a $300 million fund, which is mainly for offshore overseas investors. Then we have an India Allocation Fund which feeds into our domestic mutual fund schemes. And then we've now launched a Global Allocation Fund. So we've got 3 products. We believe we are doing a good job. My Global Allocation Fund, the fund that I feed into, over 5 years has been able to deliver more than 20% dollar returns. Now, I would say all of us in India would know that Sensex does deliver about 12 to 14, 15% return in INR terms. But the Indian rupee does depreciate by about 3 to 4% every year, which means net in dollar terms, your returns are just about 9-10% sometimes in dollar terms. While when you invest globally, when you buy, say, US stocks or China or something of that nature, the rupee depreciation actually improves your return. So if the US market, say, gives 14% return, you convert INR into dollars. And when you take back that and your rupee has depreciated, your returns instead of 14 will become 18. So we've seen that dollar returns of India over 15 years has been 7%, and dollar return of US market has been about 14%, almost twice of India. So all of us don't know this, or we sometimes feel India does very well because we look at only local currency, but we don't know that your currency always, our currency depreciates and should depreciate being a sort of emerging economy. And it's healthy to have a 2-4% depreciation, but global investing can make handsome returns. Couple of our funds, if you see, which have done very well, we had a Mirae MISC FANG ETF and funds, which we had launched in 2020. Last year, the fund gave about 88% return. We had a Hang Seng Tech ETF, which invests in China technology companies. Between last Holi and this Holi was up 100%. So I can tell you some of the funds have done well, some funds haven't done well. Which ones to choose, maybe he can suggest. For us, all of kids are equal. Right? But we have enough and more funds that do well for you to sort of choose that.
Are these from gift city or domestic? Are these gift city funds or domestic funds?
The MIC FANG and Hang Seng are domestic funds, so we take money in
I
INR.
have a follow-up question to that.
Yeah.
How is gift city going to be different from, say, this fund?
2 things. First, in mutual fund, you're not able to buy. Okay, for the last 2 years, I don't think so.
Yeah.
All of you know
Yes.
that 2 years back, mutual fund limit to invest in overseas stocks and securities and ETFs have been sort of exhausted. For the past 2 years, I gave you handsome return examples, but we couldn't take money from investors because there are no limits. So, first, in mutual fund, you cannot buy. Second, in gift city, you can buy whenever you want. Right? Second difference is that we've got some ETFs which are listed on the exchange, including Mirae, but those ETFs are trading at 10% premium because of demand supply. So you are buying something 10% expensive. When you buy it to the gift city route, you are buying at the same price. Third, when you invest in the mutual fund route, there is no limits. You can invest technically 5,000 or you can even invest, say, 50 crores. When you invest to the gift city route, the maximum cap that you can invest is $250,000 per person per year under the NRS limit. And the minimum, because we have launched it currently as an AIF, is $150,000. So minimum and maximum is again sort of different. So mutual funds have an edge there. The remaining 2 types of the gift city funds have an edge. Otherwise, you can do a lot of things both through the mutual fund and gift city route, but mutual funds are closed, so even if you want, you can't. So then this is the only option available as of now. And just to add, because you live in the right part of Mumbai, so there is another concept called as accredited investors. So if you have annual income about $200,000 or your net worth is $1 million, out of which 50% is financial assets, then you can get yourself from an agency like CDS an accreditation certification after which we can invest in as lowest ticket size as $10,000 in GIFT City. And even the domestic AIFs and PMS, you can invest with a lower ticket size. So that flexibility is also there for accredited investors.
So is it the same accreditation that goes for mainland funds also?
So each country will have a separate accreditation.
I mean, so if I'm a resident Indian, so there is one accreditation by which I can do 25 lakhs in India-based AIFs, correct?
Same one.
So it's same one only.
What's the accreditation called?
It's accredited investor, and there is accredited certification. You can get it done. Just go to CDSL website on how you can do it. It's not too difficult.
We can help you get
Maybe
it
a
done.
wealth manager or an outfit like Ankit can help you also get the certification
So
done.
there are three parameters to it. One is either you have 2 crore worth of ITR in India. The second is you have 1 crore income. I may be slightly on and off on numbers, but I'll give you the idea. The second parameter is 1 crore income plus 5 crore worth of financial assets. And third one is I think 7.5 crore of assets including 5 crore financial assets. So how some agencies do it, they take access from you on account aggregator. So they will get your assets and liabilities, financial ones. So they will get your net worth. And for income, you can produce your idea. Based on that, they will issue you a certificate which will be valid for next 2 years. And based on this certificate, as he mentioned about GIFT City, even in India-based funds, PMS and AIF, where minimum is typically 50 lakhs or 1 crore as per regulatory requirement, you can invest as low as 9 lakh rupees.
Maybe just to add to it, but GIFT City has a different definition, slightly different. So the numbers might be slightly off, so like $200,000 income, and they have 1 million and 50% financial. So it is similar accreditation, just the numbers are slightly different because everything in GIFT City, like I said, is in dollars, and the currency rate keeps fluctuating. So
with dollar depreciation, because Trump is also focusing on dollar depreciation, setting up factories in the US, will it be lucrative for the next 5-10 years to invest in this?
So good question. See, look at US as an economy and who owns US. All the top economies of the world, right from Japan to China to maybe even India, owns US assets. There are two reasons, technical reasons. I believe Trump wants dollar to depreciate for some time. US has about 5 trillion of debt to roll over this year, and they would like to roll over it at a lower yield. However, a very weak US dollar is not good for US and for the world economy. And in a tariff war place, if you keep your currency aggressive, you are not going to become competitive. We have seen for a long part of 2 decades, China had kept their currency devalued so that they become more competitive. So if you see the trade war environment that we are in, most countries will want to keep their currency weak rather than strong. And I am not going to aggressive view that dollar will de-dollarization will happen. What you might see is importance of dollar will slightly go down. All of us just need to reflect few months back, let's say Brazil, India, big countries, but trying to trade in their own currency. Right? Say Brazil and India want to trade. Why should I need to convert my money into dollars and trade? When we tried to do this, Trump came out that if both of you trade in your own currency and not in dollars, then we will levy a tariff to all of you, to all the BRICS countries. So it is in the interest of US to keep dollar as the exchange of the world, and I don't think so we are in that phase that de-dollarization will happen.
If we bring the LRS funds back to India, are the gains taxed in India?
So, see, the idea is India has always been a capital staff country. The interesting data is that NRIs transfer as remittance to us every year $110 billion every year. India is the country with the highest remittance globally. NRIs also have parked about $120 billion, almost 10 lakh crore, lying in FCNR deposits which generate 5 or 6% return. NRIs have about $20 billion in mutual funds and about $40 billion in stocks. So they like India and their families, they understand India, so they want to invest in India. Idea is, can you give an easy way to invest? Through a gift city route, when your underlying is funds, there is no incidence of paying tax. And that will make it very, very easy for an NRI to invest into India. This NRI, because he was not able to buy dollar India funds, he was able to buy mutual funds which were denominated in INR. And like I said, any NRI living outside India for 10 years has major income in dollars or dirham or whatever currency you call it, but not Indian rupee. He wants to invest in his local currency. Gift City is the only place through which you can buy in dollars. And instead of now buying the Vanguard or iShares or a Luxembourg or a Singapore fund, he can buy through Gift City Indian funds without paying tax. So it is going to be very easy, and the quantum of money that India can get can be very, very large.
My question was the other way from an Indian resident. And I transferred my funds via
LRS.
I have made.
So what is the taxation if you invest via LRS?
And then when there I'm not taxed, but when I bring the funds back to a domestic area, is it taxed then?
So what happens in India is taxation is if you hold a foreign security for greater than 2 years, tax is at 12.5%. If you hold it for less than 2 years, it's 30% marginal tax. So the way we've created our fund structure is such that we try and hold securities for more than 2 years. So your tax becomes at 12.5% at par with Indian equities. Second is we've launched a CAT 3 AI where taxation is not at the investor level, it is at the fund level. So the investor doesn't need to pay tax because that is to be borne by the fund and will be adjusted in the fund. So as an Indian resident, if you invest globally, you don't have to pay any tax, but the fund will pay on your behalf. Now if you directly buy shares, like some of you were suggesting, then for transferring you will have to pay a TCS, while selling you will have to pay tax, and that is a slightly more cumbersome way of doing it. While the fund route will be an easy way to do this.
So NRS is not, there is no TCS or TCS for Gift City.
So for LRS the rule is if your investments are greater than 10 lakhs, there is no TCS below 10, above 10 there is a TCS of 20%. So if you invest even Gift City or any other way where your amount is greater than 10 lakhs, there is a 20% TCS, but TCS is not tax. That's an advanced tax or whatever you can say. You can take it credit in your advanced tax rate. Tax liability will arise only if you sell a security, and that has to be within a period of 2 years. For
With the assumption I've held it for 5 years, and then
12.5%.
then when I get it back, it is 12.5%.
No, not when you get it back. Whenever you sell it.
When you sell it.
You can keep the money in dollars and reinvest. So I want to ask you, you just said you started a fund where the fund pays the tax and the investor doesn't. What is the rate of tax on that fund?
I'll suggest that we take it this way. So Vaibhav, why don't we do it this way? We've got 3 funds over here. You take us through those 3 funds. What are the underlines? What is the taxation? And what are the geographies? What are the implications? Who all can invest? So let's go one by one through those 3 funds. I think that will bring more clarity. Is that okay, sir?
Yeah.
So maybe I'll start with only one fund because I'm assuming all of you are resident Indians, not NRIs. So let's leave the other fund out. So if you are a person living in India and you want to invest globally, so we have a fund called as a global allocation fund. If you see the world market cap is about $100 trillion. 60% of that is in the US. And 15% is China's stock outcome. India is less than 5 trillion. That's how the sort of world market cap scenario plays out. So when we launched our product, we said we have to create a core strategy and a tactical strategy. So core will be about 50-70% of my portfolio will be core which I will hold for long, and 30 to 50% will be tactical, which I will want to change based on market view. So we've kept two things as part of core. One is AI as part of core. So about 15-20% of my portfolio is AI, and that's a core portfolio. See, the world is going to clearly see a large shift. 20% of productivity improvement will happen in AI, including fund management. In the industry that we are in, we are already using AI across department, across everything. We're not allowed to hire manpower. We have to figure out ways to use AI. So that's a core strategy for us, AI. Then we've got US, which is a core strategy, which is about 40-50%. Well, many global companies are listed in US, and they are not only in US, selling in the US. They are a play on global markets, just that they are listed in US. Whether it's Tesla, Apple, Google, Microsoft. It's just that they are listed in US, but their operations are globally. 15-20% of the portfolio will be China, and about 20-30% portfolio will be in semiconductor, blockchain, disruptive materials, and defense tech. Those are four sort of themes that we will keep shifting. And these are very interesting themes, like semiconductor. Maybe I'll take a minute. Whether you sell EV cars or petrol car doesn't matter. Whether you buy, Apple or a Samsung or a Vivo doesn't matter. Whether you buy an Apple MacBook or a Samsung Tab doesn't matter. All of them use chips. Second is disruptive material lets you play lithium and uranium. Lithium used for electric vehicle, uranium used for nuclear power and energy. I think all of us understand the importance of nuclear power in this age. Those two metals have done the best. And blockchain, I think interesting data. India has 5 crore mutual fund investors, 10 crore people who have DMAT. How many people have crypto investments? Must be 15-20 crore plus minimum. And this is in spite of being taxed at highest rate. Otherwise you would have had 40-50 crores. It's like, who doesn't have a Dream 11 account? Maybe I only don't have, but everyone else has. So you can typically say that blockchain is a technology which is very, very important to run crypto. India has not woken up to crypto, but investors have. Now semiconductor AI blockchain disruptive materials tell me 4 companies in India that are listed in this space, or tell me 4 companies in India that will list in the next 5-10 years. And you will not be able to find that. Hence, if you want to invest globally, you have to pick themes early. And that's what global investing gives you. So we've created a portfolio with all of that. Idea is to hold securities for more than 2 years. If you hold it for more than 2 years, it will be liable for only 12.5% tax. And hence we've created this as a 3-year closed-ended product so that you don't redeem it or create tax incident on someone else. So if one guy redeems, he creates tax incident on everyone else who also invests in the fund. So to create that discipline, it's a 3-year closed-ended product and gives you play across themes, markets in a tax efficient manner at 12.5% tax.
Just a quick question on the taxation again. So you're saying that if the fund also sells security before 2 years, the fund will have to pay a tax of 20%.
The fund only has to pay, not the investor.
The investor, irrespective of whether they...
The investor doesn't need to pay tax irrespective of if he's holding credit. Mutual fund, what happens? You look at the holding period of the investor, whether it is 12 months or more than 12 months. However, in AIF, you look at the holding period of the fund and not the investor. So the investor doesn't have a tax liability, the AIF.
Because this is a CAT 3, but the CAT 2 will be different.
Correct.
So I'll try to build upon it. Ma'am, I think I'll try to answer your question. So when you invest in GIFT City, taxation can be at 3 levels. One is at your level, the second is fund level, and third is underlying level. So for you, it will always be 12.5% after 2 years, before 2 years 20%. Basis when you sell, not basis when you bring the money back to India. So what you are trying to say कि पैसा आ रहा है उसमें कोई दिक्कत नहीं है, जाने में दिक्कत है. So when you bring back money to India, there is no taxation as such, it's only at the time of redemption. Now at the fund level taxation will depend basis the underlying. So if underlying is mutual fund, there is no taxation at fund level also. If underlying is not mutual fund, then there is taxation at fund level which will be internal to the fund.
So if that is true for India fund, which feeds into India,
Yes.
but global fund mein, taxation will be only on the fund holding a security for more than 2 years.
Great.
So there is no tax on the resident investor. So maybe like you said, 3 angles. Individual doesn't pay tax. Only the fund has to pay tax. And the fund, if it holds the securities for more than 2 years, will pay 12.5%. So it is very simple.
So third layer is at the underlying level. So even though it's not relevant for this crowd, but I will still mention. So if it's India-based fund of fund, then because in India mutual funds are pass-through structure, so there is no taxation at there also. So for you, either it will be at fund level or at your level.
Anyways,
So funds aside, if you are investing in equities, for example, let's say any international equity for that matter, couple of questions there. One is, how does the same taxation apply that you just spoke about for the fund? Now just think about it purely from equities point of view. And second question is, are you allowed to invest in F&O in international markets?
so on your question, the taxation when you invest outside, whether it's a fund or equity, remains the same. Half if your holding period is more than 2 years, and marginal 30% if your holding is less than 2 years. That is common. That is a taxation when you invest internationally. So even at the equity level, that's a sort of tax regime. On your second point, can you do F&O outside India? I think so. What LRS doesn't allow is through LRS to do futures and options or derivatives. So it will not allow you to do derivatives when you are using your LRS money.
The fund could. The category fund has that protection.
The fund could. So you are investing in a fund. The fund could have various complicated strategies. So that still is an easier one, but you directly cannot do it through the LRS.
If my memory serves me right, the restriction is for speculative assets, including F&O. So it's a very open-ended definition, but that's how it is under LRS.
I think leverage is not allowed. So F&O anywhere has an inbuilt leverage.
Correct.
Anything where your losses can exceed the capital you've sent potentially
Yes.
is not good.
Committed under LRS.
There's a fund can do the legal, not a fund which can do it.
So we have funds globally as well. Globally, some of the funds that have done very well for us are like covered call funds. So basically, if you see market to be range bound, you typically try and make money by selling option. You are sort of out of the premium option and take the premium. That's a strategy for us, which has globally been very, very large. We have about few funds with about $20 billion of assets today. So based on the regulatory framework in GIFT, we will be launching different products. Regulators at the moment comfortable getting easier funds for investors to understand before launching exotic products. So very recently, I must tell you, we just announced that we are launching SIF, which is Specialized Investment Funds. Those funds allow you to do long short as well through the mutual fund route. So far that was not allowed through the mutual fund route, now it is allowed. So it's an extension of what products you can do. Similarly, exotic products will also be allowed in the GIFT City in that sort of manner.
Do you take money from, there is a rule that your companies can put up to 50% of the net worth in the GIFT City. So is that something that's available for your funds or
So for a company or a family office, they can invest up to 50% of their net worth based on the last audited balance sheet through the OPI route in the GIFT City fund. So that is there also in our fund.
And that would apply, I mean, the company is very clear, the net worth would be the number. If it's an LLP, how does it compute it? So, any idea about that? Because you have a current capital.
We'll have to check that one, but it gives you a lot of flexibility of taking significantly higher amount of it. And the OPI route is a very easy way to do it, to invest globally, and gives you a lot more flexibility.
And in that, then the PCS is not applicable.
No.
It would be okay.
So, GIFT City has also started family investment funds. Unfortunately, not picked up in India because of regulatory
Changes.
not changes between RBI and SEBI and IFSC. Discussions are going on. So we had the Azim Premji Family Trust, Family Investment Fund set up. Eventually, the idea is if you see the Adani, Ambani, all the large families are setting up family offices, say Dubai, Singapore, etc. Why should you have your family office outside India? Why you can't have it in the city? So I'm sure the regulatory framework is being made to get them to invest through the GIFT City route. In fact, the GIFT City route also allows global family offices to invest into India and also set up an office here. And also is making very easy for sovereign investors to invest. So one of the largest sovereign investors in India is Abu Dhabi Investment Authority. And they've set up a large office in GIFT City through which they will be managing all the funds through that zone. So very tax efficient manner to invest. No capital gains, no stamp duty, a lot of ease of transacting, and hence a lot of institutions and sovereign wealth funds will also set up in the GIFT City to manage this very easily.
For an Indian family office, is the tax regime still lucrative for them to have?
So the family office, Indian family office, the regulatory framework is still under limbo, is still under discussion between regulators. Once it is cleared, and I hope it will be soon, it will make it very easy for them to invest. Why should you have your family offices being set up outside India? It's a very basic thing. I think the government understands this. It's just 2-3 regulators have to sit together and put their mind to get this happen.
So with a global allocation fund, say after the 3-year lock-in you decide to sell like a portion of it, as the investor, what taxes would I have to pay? What is
The fund will pay 12.5% if the security is greater than 2 years. That's it. The investor doesn't have to pay any tax. Even Cat 3 have.
Not in capital gains.
The fund is paid on your behalf. That's it. See, the Cat 3 have, it's simple. The tax liability is not on the investor, it's on the fund. The fund is already paying that tax. You don't need to give tax twice. Same thing. So it's at the fund level.
Can incoming funds be invested in real estate equity funds?
Absolutely.
And there's no cap on that?
No cap on what?
In how much they can invest? NRI, sovereign funds, foreign loans?
So you'll have to create a fund, right?
Yeah.
Which will invest into real estate. So each fund will have a strategy. It could be that I will invest in X city or Y city up to 20% in one project. And they can create
But external investors can invest freely in that.
Absolutely. See, the idea is you can get unlisted shares, real estate, bonds, equities, everything, whatever asset class you can think can be invested by foreign nationals to NRIs.
And how do they get taxed on that?
Again, depends on the nature of the fund structure that they create and the underlying that they choose. No one simple rule that I can say that this is the only way that they will be taxed. A lot of people play in real estate by taking real estate debt in a portfolio, and hence real estate debt will have a different way of taxation than buying physical real estate or buying real estate equity in a real estate. So depends on structures.
You can form a trust also in GIFT City or
As an investor,
yeah.
if you have a family investment fund, you could, but that's still not sort of ready. So, as an individual, I think the only route is go through funds to invest.
But I try to get clarity on it from a legal firm. So we have a legal firm tie-up who helps you for this, for setting up offices in GIFT City only. So I'll get a meeting done for you.
Yeah, but typically families are not setting up trust there because there is a lot of still debate between regulators.
So if you go by basics, it's a foreign land sort of.
Correct.
So how you get a trust registered there?
So you can set up a family investment fund that you can, which can invest in various parts. I don't know whether they can set up it as a trust.
But I doubt that will be the issue. I'll tell you why. Because in DIFC, which is supposed to be counterpart of GIFT City or the senior counterpart of GIFT City, based in Dubai, they have such kind of services. So like in Dubai, you can either get your will registered in mainland or in DIFC also. And certainly there are different rules in mainland. There are different rules for non-Muslims, Muslims. In DIFC, it's completely secular. So any more questions that we have? So I'll summarize the discussion. So I'm assuming this crowd is completely resident. There is no any non-resident over here for taxation or legal purpose. So resident Indians can invest through GIFT City in outbound funds. Outbound means those funds which invest outside India only. I think they have some restriction, 5-10% can still be in India. Or as the gentleman mentioned, you can invest into transaction platforms, etc., where you take the call. You do it under LRS, $2.5 lakh per year, per person, per pen. And for taxation purpose, if you redeem your investment before 2 years, there is 20% taxation. After 2 years, it's 12.5. And at the time of bringing the money back, there is no tax as such. It's your money that you are bringing back after doing the redemption part. Anything that I missed? And of course, Mirae has launched their global fund, so you can. So whosoever want to have a discussion on this global fund of Mirae, my team is here. You can share your coordinates, and we can have a one-to-one discussion on the same.
I can only say one thing to add to Ankit. I have gone and presented at hundreds of places. I think this audience have given me the toughest questions. Right? So I can only tell you that most places when I go, it's like GIFT City, what is GIFT, how does it work, and that's it. People are not too well versed. It's a great to hear that all of you know so much about investing. What is Cat 1, Cat 2, Cat 3, how do they work? And I think maybe that makes Ankit's life easy or difficult because all of you know a lot of things. But I can only say one last conclusion from my side is that the idea of GIFT City is to make investments very easy. From both resident investors to go globally as well as get NRIs, foreign nationals, to come into India. And for resident Indians, I don't think so there is a better way to get a global exposure because buying direct stocks or ETFs is not easy, neither it is cost effective. All of us might think that buying an ETF at 20-30 basis points can help me save my cost, but the custody, currency conversion and broking fees are very, very large, and funds are able to manage at a much lower rate in a cost efficient manner, and they can manage their money better. So it makes life easy for all of you to look at global investing because we can't be looking only at India where 95% of the opportunities are available globally.
Great. Thank you, Vaibhav. So I'll just, I hope there is no more questions, so I'll like to conclude the session. Thanks, Vaibhav. Thanks for joining us. And of course, the audience for asking such tough questions. Probably they will add to our knowledge also. We will go back and we'll work upon it. I'll just conclude with 30-second pitch about Wealthy Nivesh. We are a team of IITians. I'm from Delhi. My partner here, Aditya, is actually ISB Hyderabad. Dean's medal holder in finance from ISB Hyderabad. And we have built some algos which help us to achieve returns in the range of 30% for last 5 years. So this algo has been built with Aditya along with our third partner, Professor Vikas Agarwal, who is Bank of America Chair Professor in Georgia State University. And I am sure, listening to the term algo, you guys would be thinking it's about equity, it's about mutual funds. So we select mutual funds through it and we build mutual fund portfolio through it. There have been 2 downfalls since the time we started. From December 22 to April 23, market was down by 10%. Our portfolio was up by 5%. Then recently also when markets were down by 15%, our portfolio was down by only 3%. This I am talking about mutual funds only. And I believe when you generate high level of alpha, so alpha for our mutual fund portfolio is 8 to 10%. So when you generate high level of alpha, then you have got high beta also. So that means when markets go down, your alpha will be negative. But for us, alpha has been positive because of some of our strategic and tactical calls. Strategic call is about our algo, and tactical calls is about market valuations. So we can have a one-on-one, meeting then with anybody who is interested to explore our services, and we'll be very happy to serve you. I anyhow keep on coming over here being a member, so look forward to engaging with you guys. Thanks a lot.
Thank you so much.